Hello and welcome to the highlights of CNBC Africa's coverage of the World Economic Forum for Africa 2015. I'm Wole Famrewa. Over the next half hour, we tell you the stories about some of the conversations that took place at this year's event, as well over 1,000 delegates consider the growth story of Africa going forward.
I am confident. We've had numerous discussions and we've fumbled historically as a continent, but particularly over the last 10, 15 years, there's been a huge recognition. The appropriate regulatory, legal, both fiscal, monetary environment has been put in place and we're making progress. But it's an ongoing process. You know, to be competitive is not just to be competitive in 2010 or 2012. We have to continue to be competitive. If you look at India, if you look at Brazil, and a few other countries, there were times in their history over the last 10 years when there were very, very exciting destinations for foreign investment. And they also went to a period where the investment community saw better opportunities elsewhere. So we've got to stay the course, both in South Africa and in the continent.
When you mention staying the course, it goes back to the fact, as you allude to, we're competing with India, China, Brazil for foreign direct investment. If we manage to attract that investment, our growth rates will be boosted by sheer investment in infrastructure, which will put us back on the global map.
Absolutely. You know, infrastructure is critically important. But, you know, we've done a lot of the talking over the last 10 years particularly. There's a lot of good things that has happened in our country, on the continent. We need to accelerate some of the regulatory environment. And, you know, in some respects, we've got to be creative and innovative. Look at the tax dispensations we have and to create other incentives that would make South Africa and the continent even more attractive.
Your thoughts about what should be maybe the top two priorities?
Interestingly, everything I have said are interrelated and can be handled.
Right.
But if you ask me about the priority, government has to take a bold step and hands off the downstream.
Right.
This issue about subsidy is killing the country. The real impact is not reaching the people for whom it's been designed for. If you take kerosene subsidy, government is delivering kerosene at 50 naira per litre. The real poor people who are using kerosene, some are paying as high as 150. It's not working. If you also look at the subsidy in PMS, the queues are only in Lagos and in Abuja. If you go to the eastern part of the country, it is deregulated. The gas stations are selling at competitive price. Let competition drive the price.
Right.
If you go to the northern part of the country, it's the same thing. It's not sustainable.
Right.
And the government should hands off that immediately.
Right.
In the upstream, one thing they must do is to ensure security of the oil installations. That is the only way the produced hydrocarbon gets to the destination. Oil theft must be addressed.
Yeah.
The next thing is the cash call crunch. It is indeed crippling investment in the industry.
Many women on the continent are actually entrepreneurs, if you look at the informal sector. But in the formal economy, very few are there. And our work as Graça Machel Trust, we establish networks of African women in business to precisely help them to move from the small to medium, so that we take also some of the medium to big. Our view is that women have the capacity to manage big business. All they need is regulatory support, it's training, and it's financial and mentorship. And every year we'll take a group of women from small to medium and another group from medium to big, trying to build a movement in which we don't talk about not having big women entrepreneurs. We build waves of women who take advantage of the...
Are times changing quickly enough for you? The other day I met a young man from Kenya, 38 years old, investment banker in charge of $1.5 billion in investment funds. And I was thinking 10 years ago, never mind 20, you would never have met a young man like, is it changing quickly enough for women?
No, not enough for women. It is true that if you look at the younger ones, particularly with ITs. Yes, they are coming. But the huge majority, the millions of women, and this is what I'm talking about, they are not taking those opportunities. And actually, in some cases, they're not confident enough to address a financial institution to take a loan, although they are good managers, but they fear. So we have to build confidence in them. We have to give them the training, as I was saying. We need to facilitate coaching. And our view is looking at millions, not just a few who happen to have had opportunities much earlier as young, who can be doing that. But the transformation of African economies will only happen if we have women at the center of that effort.
25 years ago, people, particularly foreigners, came to Africa to look at investment opportunities. If I look at our meeting, people come today to look at solutions, joint solutions, in cooperation with government, because it has become very clear that the big issues cannot be solved by governments or business alone. They need cooperation. And I think business is aware that they are coming here not just to find an investment opportunity, but to contribute to the big issues which we have to resolve.
Professor Schwab, you refer to foreign investors, and Africa has to compete with other emerging markets, and we are spoiled for choice. There's India, there's China, there's Brazil, to mention just a few. What do you believe are the biggest challenges, or the biggest challenge rather, that Africa has to overcome to maintain its competitiveness when it comes to attracting foreign direct investment?
There will be more competition in the world. Let's look at the reality, but I'm a big believer in the potential of Africa for two reasons. First, Africa has young people. We should not forget countries like China and so on will have to face an aging society. Africa has also, and I see it in the young people who are here, a fantastic entrepreneurial potential. So what will be needed by governments is to create the framework to allow those peoples to exercise their creative talents. And I think also what is absolutely key for the continent is education, because in the future we will need talents. Talents will be the key driver to be successful.
We also see the banking landscape transforming in the future. For us at Diamond Bank, we see our competition as people who are in the payment space, who are in the financing space, and also who are in the access space. And that goes beyond banking. You only have to look at companies like Apple, Google Pay, Amazon, and you see they are now making foray into that space. So at Diamond Bank, we are building that infrastructure to be able to either compete or collaborate with organizations such as MTN, who have a distribution network.
But what about your broader retail banking strategy? I know Diamond Bank is one of those banks that have invested quite heavily into retail. You bought into it early. As you look back, your thoughts about that, especially as the environment changes, given the pressure we're seeing on the Naira, interest rates being high where they are?
Well, I think for us, what we are doing is actually diversifying our business and also our revenue stream. First of all, the future of Nigeria is going to be from small. The economic growth is going to be driven by small businesses, by payments, and without even with the economic depression we're currently facing, the GDP is still growing at 4 to 5%, and that is from internal growth, and that is from a very small percentage of the business. Now imagine if you could optimize that payment in the payment space, and if you could now connect more people into the financial network, you would now see an increase in commerce, and you only have to look at the new businesses that are coming and that are making waves in Nigeria and changing the landscape. The Wakanaos, the Cafe Neos, the Congas. These are new businesses who are building their business on a digital and technological platform.
The next big thing, the game changer, is ICT. Technology. You need to deploy technology. I'm glad that you're beginning to talk about you should be one of the
ambassadors of deploying the biometric fingerprint as a way of identification, a way of doing business. Nigeria is probably the only country of our size of population and GDP that had not been able to deploy that. Hopefully, give the next few months to come, we already started deploying that. If I say we, I mean the banking industry. You know, it's good in coming, it's been long it's coming, and when that is deployed, that is going to be a major game changer, because today, most people who transact banking businesses, they do it from their homes, from their offices. They don't necessarily need to go to their banking premises to do such. They carry with them their mobile devices, their smartphones, their tablets, their iPads to do transactions. Payment system is now through the channels of mobile banking. And also e-commerce. E-commerce is going to be the next big thing. E-commerce has been underplayed in our environment because of quite a number of infrastructural inadequacies. Infrastructure in this case, I'm talking about communications. Communications, how do you link up your iPad, your tablet, your smartphone? How do you link them up?
And of course the payment systems.
Through the payment system, yes. So that's the infrastructure that needs to be improved upon.
Right.
And e-commerce is the next big thing. And we all are ready for it.
Manufacturing is a key, really, area for us. One of the things that, as a continent, we are working on is to make sure that we open up our boundaries between countries so that trade can flow. But one of the things that we are aware of is many of the things that we trade in are actually not made in Africa, not made in our countries. Over 70% of international trade is in manufactured goods. And yet the share of Africa's manufactured goods is insignificant. And so we are working hard as a continent to push our industrialization agenda so that we can produce more things that we consume in our respective countries as opposed to relying on imports. And so in Kenya, what we're doing is we are driving that lead on industrialization through agriculture. It's an area that we believe that we have raw materials, year in, year out. We have the skills that are necessary. And agro-processing will be a key driver of industrialization in our country, but I'm certain in other countries as well. So we've picked up, for example, 3 key sectors. One is the apparel sector. So if you look at the value chain from growing cotton right to the fashion, we want to play a role in this particular place. And the recent approval of the AGOA, or the discussions that is ongoing in the US, is going to play a very big role in actually creating the necessary demand that will be the catalyst for bringing investors into a lot of African countries to actually invest. Leather is another one. We have all the raw materials that are today, over 90% of our leather is actually exported in semi-processed form.
Now, those were just some of the lively discussions that we saw at this year's forum. When we come back, we bring you some of the lively debates and the conversations around Africa's future. Welcome back to the highlights of CNBC Africa's coverage of the World Economic Forum for Africa. Let's now take you into some of those lively debates that center around building a better future for Africa.
Firstly, there is a lot of money in the diaspora, and so one can envisage instruments that appeal to the diaspora and can be used for that purpose. One can also envisage a situation where you use mechanisms that tap into human solidarity, and include those as part of the bonds or the instruments that one issues. But fundamentally, what the continent needs to do is to build its financial infrastructure and deepen financialization by putting in place the appropriate regulatory mechanisms, such as pension fund reforms, insurance legislation, and then let governments issue bonds so that you increase the depth of the capital market.
I think we need to move a step further where and somehow started in some development finance institutions, where we can leverage this development financing to crowd in private sector financing. I think that's key, how we can, that's the blending of the financing, as we are saying. So how that partnership between government, the private sector, and the development partners coming together to really, in most cases, you have one official financing can bring in like 3 units of private financing. If we can really have that sort of architecture thought of and developed, that could bring in more capital to finance development in our countries.
When you really look at the African continent, we are a very young continent. 65% of our population is below the age of 35. And this is a resource that we have to leverage as Africa, and a resource that we cannot leave untapped. And the only way that I believe this resource can be fully tapped is through integrated partnerships. I do not think that businesses alone will be able to address the issue of people that you are raising. It needs to involve government institutions, it needs to involve civil society.
Where we talked about we have to move the girls past primary education into secondary education, because if you don't do that, you end up tokenism. And that's the last thing we need. Yeah. So I urge that we really do start from looking at education opportunities right at the beginning.
I think if you look to African economies, we have in every single country of ours 2 economies. There's the formal and that is informal. The informal, which is made up mostly by women, it's just a sector in which there's survival. People struggle and spend their lives, women, just to get the minimum to survive and maybe to succeed to send their children to school or to treat them well. But they don't prosper in informal sector. Then you have the formal. And the formal sector, it's precisely where I think I wouldn't call progress. You have a few faces, very few faces of women who are in formal economy, whether it is industry, whether it is in the boardroom, very token. So my view is that we made progress in political representation, but in the economy, we have to tackle this from scratch, in my view.
Yes, we have to train and empower women and enable them, but actually, in the end, it is not about women having to do something, because women have done so much. I don't know what to ask of women anymore. It is society that must change so that it acknowledges that it is made up of men and women.
We need to bring the right people together, and Bertrand was there and many others, in figuring out what the learnings are from Ebola, because very quickly the private sector came up with about 500 million, $500 million in money, but then everybody felt a certain level of frustration that we were not prepared for this, like many of the other things that were happening in the world. And the discussion brought me back to something I had at that time with Josette Sheeran, who was leading the World Food Program, that we didn't even have a global mapping on nutritional profiles or emergency response in case these things would happen. So that brought us together in the WEF in January. That led to the BCG study, which I think is a very good study on the learnings, but they're only as valid as we want to put it in action. I think the way that it is proposed is to look really, there is no replacement anywhere, even in business for ourselves, to first of all be prepared, get the scenarios going, and they need to happen at a country level, then at a regional level, and some of that needs to be done globally. So this preparedness is very important. And then the last thing, which is often missing, is the world has now so many crises, and you basically go from one month to another, that there is a fatigueness that sets in after about 2 minutes. So the rehabilitation plans are equally important. We thought it would be a good idea to look at different types of disasters that you have. You have political upheaval disasters that need a certain type of response and specific measures. You have public health issues or pandemics that we're now talking. They need a different type of response. Then you have issues like natural disasters. Increasingly, the effects of climate change are becoming apparent. So how do we deal with those? And the last bucket, you could call things like Nepal, which are these one-offs, totally unforeseen. People call them black swans or whatever. And for each of these, we need to start to think about how we move it forward. Now, one of the suggestions which business very much likes, because there's an enormous appetite for business to participate. They have the funds, the expertise, and all that. But if you talk about public health, the first thing is never to abdicate the responsibilities of the government. You have to put that into government control. You don't want to privatize all of these issues. So identifying, in this case we're in Africa, identifying 2 or 3 countries where the work could be started, where we bring actually the right people together.
The United States spent almost $1 billion building Ebola treatment units. And none of those units went up while the outbreak was at its peak. The units were actually completed when the number of cases started to go down rapidly. And that was happening because Liberians and people and communities themselves started to take matters into their own hands. And I don't think we should dismiss that. I think it's extremely important that whatever we do, we look at plugging into those existing systems and really work with communities and people. Otherwise, you can build all the hospitals you want. But if people are not educated, if there are no roads, if there are no infrastructure for them to actually get there, then it's all in vain.
What did the Ivory Coast do well to keep it outside of their borders? How did Nigeria bring it quickly under control when they had a few cases? I think those are the few countries we need to learn from and then scale it up. But at the same time, look at other disasters. There are 2 things that haven't been mentioned. I don't know if you did before, but because we can all say that there were no plans, there was no understanding, there was no trust. So all these things that weren't there is a little bit exaggerated. At the end of the day, I think the world again rose to the challenge of humanity. But again, we always have to set the bar higher.
Each time we talk about development in Africa, it's about money. We need lots of it. But money does not bring about development. Yeah. What brings development are policies. Policies that are predictable, policies that make sense to investors. And then you have capacity to implement the policies. So what I'm saying now is that the policies in Africa are getting in the right place, almost. A few countries make mistakes. Some are suffering implementation capabilities, and those who have to help. But on balance, I think we shall still have a big gap on infrastructure. We have to close it by attracting private capital, and that means the right policies, the right implementation capabilities. And that is what we are trying to do in the African Bank at this time.
All around the world, we are sitting on large liquidity, and we want to have higher return because the population is aging in Europe. It's aging in other countries. And they are hesitating in putting these long maturity resources to finance infrastructure. The next step for us is to start tapping on that liquidity to be able to not only bring resources in Africa, but to bring them at the lower cost and to be able to smooth the debt profile of countries and have the macroeconomic policies that are put in place not be affected by this effort to accelerate our growth.
Over-reliance on our mineral resources as a source of income and over a period of time has actually proven not to be a sustainable path to take. But what we have also picked up was that, for instance, with the fall in the oil price, it's not all of the countries that actually benefited from that. Some countries who are oil exporting countries took the knock, and the ones that were oil importing actually got the benefit of that. And but also what that does is it has an impact on our current account balance, where you would find that depending on what monetary policy you exercise in terms of your exchange rate policy, you would actually be able to take advantage of your floating exchange rate, like in our case, to be able to mitigate that. But I would want to believe that you do need very strong macroeconomic policy in order to be able to respond to such exogenous shocks. with this one being, the one on monetary policy being one of those. But at the same time, diversification, as my colleagues have said, becomes an issue, because if there is a fall in the commodity price that has actually been a source of revenue for your economy, it means you need to find and explore other sectors that would better place you in order to be able to make up for lost revenue. And it is for that reason that I think we're beginning to look at, like in South Africa, other sectors like agriculture that otherwise were on the decline. And it is important that, as the president of the African Development Bank said, that we need to transform our economies such that they are structured in a manner that they would be able to respond to these challenges much more flexibly and favorably.
First of all, let's remove the work permits. Let anybody in Kenya, Uganda, and Rwanda be free to work anywhere. And that was done. Because they discussed it, they took a decision. Number two, they said, why do we need passports? And all the heads of state made a demonstration that they traveled on their ID card. Means every student, every citizen, you just travel on your ID. Whether you go by plane or you go by road, you travel on ID. And that's possible for the three countries. Other countries of East Africa are considering that one as well, including the work permit. We also said, if you have to call each other, because you do business within the same region, why do you need roaming charges? They took a decision to remove this. And the company's actually income, in terms of calls, it doubled in 1 month. And for now, you can't reverse it. It means that if you're a Rwandan and you're in Kenya, you can call as if you're in your own country, and there are no costs on roaming charges. And this has helped in terms of improving business, because you have ordinary people, they don't need passport, they don't need anything, and this is helping the trade within the region.
And that ends our coverage of the highlights of the World Economic Forum for Africa 2015. I'm sure you've learned a thing or two about how business leaders and policymakers are now thinking about the future of Africa. Thank you very much for watching. Until next time, I'm Wole Famrewa, and it's goodbye.